What's up? Welcome back to the weekly video, guys, where I try to combine the news, the economic data, and the technical to predict the general market movement for the upcoming weeks. So at this point, last week we actually had a pretty boring week, except on Friday. We kind of like pump up here, but we'll talk about that in the technical part of the video. But for now, I would like to talk about the economic calendars and what can affect possibly the market itself. So Monday on this week calendar basically is I didn't expect it to be busy, but it's quite hectic. So on Monday here we have like durable good orders. This actually it's been trending down, so I'm not sure if it's going to be good or bad if we go negative on the data, because this is kind of indicating of the economy itself. But the thing is, at this point right now too, there's another problem is that it seems like recession, if if there is a recession, it's probably good for the market this past week, because I guess like I looked through some of the chart. That's how I see the viewpoint is like, bad economic data possibly a good thing, because right now, especially for the tech sector, if it's bad economic data, the Fed not gonna increase the rate, and that's good for the tech, and then a lot of stuff. So yeah, once we get to the technical part, I'm gonna show you more. But at this point, I'm not sure. But right now it has been trending down, so it's possibly could point, if we go negative, it could possibly point to possible of a recession. And then we have pending home sale. I don't think that's going to be a big thing. And then the Fed manufacturing index, this is like part of the big picture, so I don't think that's going to be a big deal. And then Tuesday we have retail inventory ex auto. I'm not sure that's going to be something that's important either. So right here on Tuesday, nothing much. So Monday we will see how the data is. I mean, if I think if it come out good, then it might be bad for the market at this point. And then if it's come out bad, it might be good for the market. So the market might continue to run. I'm not sure here, but we will see. And then on Wednesday we have Powell speaking again. I'm not sure what he's gonna say, because we did have him last week too, right? And then the week before that. So I'm not. I mean, he is always important, but at this point, what can he say? I don't think he's gonna make any changes to what he is doing right now, because he's kind of like data dependent at this point. Yeah, at this point right now, everything is based on him as data dependent. So I don't think he's going to make much of a difference to the market, to be honest. And then Thursday we have personal income and spending. I think that would be probably important, because that's going to point whether or not we're going to recession or not. But at this point, if it's a bad, it might be good for the stock market. I don't know. And then the PCE, at this point, I don't know if, I mean, the Fed is using the PCE as a gauge compared to the PCI, but at this point, I mean, they already make the move last week, so I mean, this might not be important either. And then we have Chicago PMI. We will see that part of that's, I guess, part of the ISM manufacturer here. So we will see how we doing. We did trend up the past 2 months though, so right now, like, multiple things point to different things at this point. So right now, this week, I think, based on this information right now, if we might continue to trend up. I didn't expect we to be going up last week at all to fill this gap, but we did, especially on Friday. But we'll talk about that more. Okay, so but the thing is, next week here, I think it's important, because that monthly employment data. So we will see how that go, because next week I think this is very important, because that's gonna point more on consumer spending, and possible if the unemployment come up, that's gonna be a problem for the economy, I guess. Maybe not the market at this point. All right. So next is the calendar earning. I mean, we don't have a lot. and I'm not sure how significant these going to be. Nike, Nike is consumer spending. I mean, it's a big company. I think the only thing right now, I go to the mall, the only store that is still like busy is Nike. Everything else are not, like, just very thin on traffic. So at this point, this might be a mover. If they do bad or good, we will see. All right, and then we have the General Mill, we have the McCormick, and then we have the oh my god, I forgot what this is. But these are staples, stable company, right? So I'm not sure whether or not they be able to pass through the inflation to the customer or not, or the customer right now maybe trading into generic brand instead. So we will see, because that's they have a tremendous effect on the customer behavior too, right? This is going to say whether or not they do good. So that's the thing. So basically, Monday afternoon is Nike, and then Progressive. I mean, yeah, on Tuesday afternoon we have Progressive. This kind of interesting when you look at the technical chart of it. All right, and then yeah, we have on Wednesday. I don't think this Body Bath and Beyond, and then we have Paychecks. This one, I mean, I think these two, if they do bad, that might gonna signal something for the market. All right, and then WBA on Thursday, STZ, Simplified Food, and MU. Okay, but at this point, I don't think these really important, but we will see. And then the uncertainty, long-term outlook for the market right here. Not much up to date right now. I decided not to go over these because it's kind of redundant in some way. So anything in blue, if you're interested to look into it, that's something you can. All right, but one thing I realized here, recently I realized this, right? The demand destruction, I think, is escalating, especially in the lower class, in the ghetto. People are not burning fireworks because before, like a month before July 4th, like fireworks usually, they usually play with that every night, but lately not a lot at all. So that's one thing. And then on the weekend, especially Saturday, cars tend to move. People used to go out on Saturday night, but right now after 9 or 10 o'clock you cannot find parking at all because everybody stay home. So that's another thing. So that demand destruction in the lower class. That's what I could say, And then if you want to read this, continue. That's all. You could pause and read it. I don't think it's that important at this point. All right. So let's go to the technical part. My favorite part of the video. Okay, so basically, I'm sorry, I'm kind of nervous at this point for some reason. It's late. Okay, so basically, the thing is, right, we were going sideways. I didn't expect we to move up, but we did, and we filled this first gap here. We do have another gap that we need to fill. Okay, but for the thing is, like, you have to look at this. The volume here is very low. I mean, you don't need high volume, to be honest. Volume could come in later on, but at this point, I would feel better if there is some volume. So at this point, next week, whether or not we're gonna fill this gap, that's a possibility at this point right now, because after what they pulled on Friday, let's take a look 6-minute chart, right? So basically, we gap down here, we gap down. Now we fill up the gap. The weird thing is that, right? So we gap up here. So there is an open gap that might need to be filled on the downside. And here, this gap hasn't been filled yet either. All right, and then look at Friday movement, right? The first hour they gap up, and then they ram the stock up, and then go sideways the whole day until the last hour, and it just point up. So at this point on the volume, look at that. It's not that significant, and when it's broke above this, that's the target is this. So whether or not we're gonna come up to here next week, that is a possibility at this moment. And then this part right here becomes somewhat of a support if they do come back next week, because next week, like I said, based on the economic data, I don't think there is anything important that much that could move the market like crazy, except for the PCE or maybe Powell speaking, but I don't think it's gonna be doing it. So maybe the trend should continue to fill this gap up, if because last week we have a short week too. That's another thing. So I'm not sure. This week we're gonna have a full week, and let's see how how do people think about this move up on Friday here, because it's a big move on Friday. All right, so that's just that's the 1 hour chart, so the 60-minute chart at this point. And then I mean, possibility right now, I mean, whether or not we're gonna go up to this point, to this next level, that's after the gap fill. I think this is the next level, that's gonna be another resistance. And then unless we make a higher high, then I think, you know, the dead cat bow is dead for real. You know, the maybe if we move above this high, I think the bottom might be in, if that happened. And at this point, anything can happen, because you know what happened on Friday last week on Friday was somewhat it's not dumbfounded, but you know, it's just weird the way how the market move right now. And this is the weekly. If you look at the weekly, we all feel this. We only have the gap right here, right? We all feel this gap, so it's a little bit different on the daily chart. And then the volume, it a little bit lower compared to this on the move down. So I don't at this point, I still believe this is a dead cat bounce, but you know, unless we move above this level, okay, then I think that count is not going to be true anymore, and that could be the bottom if we do move up above this level. We will see though. So that's it for the SPY. And the QQQ here, this is the thing, the QQQ is so strong, right? It's always through this gap and it's move up above here. So at this point, I think the QQ is strong. And then the reason, maybe when we look at the big cap tech, they did move up a lot. So maybe that's why the SPY move up and the QQQ move up that strong. But in the general tone wise, general market, I'm not sure if they are. All right, so that's a QQQ. I mean, they possibly gonna fill this gap, and if they do move up here, they did go out of this short-term downtrend here, so that's kind of bullish. And we will see if that's gonna happen or not, because right now it seems like bad news is good news for the market, especially for the tech sector. Because if the Fed decided not to increase interest rate due to recession problem, then you know, it's good for the tech sector. So that's why I guess this last week the tech sector moved up a lot. And then look at this, right? It's right, because the thing pull back to the 50% retracement, and then this selling here, the volume kind of low, which is bullish, because you know, when we come down here with high volume of selling, and then but this selling right here is quite low compared to this, so which is exhaustion of selling in some way, you could say that. And now we've moved back, but we will see if we are able to move back enough to make a difference here. So we will see this week. I think if anything, they have to do it this week, or else next week we have the unemployment. That might be a problem if we do. I'm not sure if they're going to change their mind if unemployment come out bad. Will that gonna be like they're gonna like, oh shit, we're gonna be in recession for real? Right now, you know, I don't know what's going on. I'm not gonna lie to you, because to be honest, I'm new to this, and I'm gonna be frank with you. All right. Next is the Dow Jones. The Dow Jones fill the gap also. Okay, but somewhat similar to the other chart. Nothing much different. You know, Friday. The only thing is that on the Dow Jones, the volume is so low. And that's the thing. But the thing is, like, it pulled back to the COVID high here, and then now that's why it bounced. But one thing I believe there is an open gap here. That's why I say I believe we're still gonna move lower. But at this point, you know, the market gonna do what the market gonna do, and unless it break this trend on here, right, it has much higher to go on the Dow Jones for to make this the actual bottom. But we will see. So first thing is the gap fill for us, and then we'll figure out what happened. All right. The IWM here is kind of weaker, and that's the thing, right? If we do, this is the small cap, right? It's more sensitive to the interest rate. But this thing here doesn't say the same thing. As this is somewhat of a diversion, right? It's weaker than the other sector, the QQQ. But this is also sensitive based on interest rate too. So I mean that's one thing here. If this move up also as strong as a QQQ, then I say that would be we would say the recession might not do any problem with this. But right now, I mean the small caps say something else. So that's a diversion to see at this point. All right. And then we have the downtrend port here. It moved up from this point, but I think the uptrend is kind of broken. This is going to be the strong resistance for them to come up, but we will see whether or not they're going to move up. Oil did go down in some way. The price of oil went down. Maybe that's helped with this. But the thing is, the gasoline price and diesel price did not go down though. So the thing, oil price and versus with the actual gasoline and diesel price, not the same. Who the heck? All right, so that is the Dow Jones trend port. Right, and then the TLT here. This one I looked a little bit closer because I did start a long position on the TLT, which I'm not sure that was the right move. At this point, the downtrend is still, in play. At this point, that we did, we penetrated the downtrend a bit here, we penetrated the downtrend a bit here, but we moved back down. So whether or not, if this move up, it's going to be bullish for the market, right? Well, depend. Yeah. So I mean, that's lower rate for especially for the tech sector. But at this point right now, I mean, it's still we could still make a lower low here, because if next month PCI come out, I'm not based on what Powell is saying right now, right? Powell saying it's going to be data dependent. Okay, if the CPI come out next month, which is like 3 weeks, 2-3 weeks from now, and it's come out bad, which I believe is bad, because the thing is, gas price increase at the end of beginning of the month. Gas price went to $5 in the East Coast. The regular gas price went to $5, which is pretty high, and that's when I see demand destruction like kick into gear like hard. So at this point, I believe this month CPI is still high. So if the CPI is high, Powell is going to force to increase the rate, right, based on the market pricing. So we have to look at that. I'm not sure how the market going to price in, but if it's high, then the market has to price in a high increase in interest rate, and that might bring the market down in the short term. And then, they might price in the recession or that stuff. We will see. All right. But at this point right now, a downtrend is still intact at this point. The thing is, what I'm kind of conflicting at this point, right here, we move down this projection, right, at 180, we move down to 135. That's 45 point, right, and then 155 subtracted 45, that's about 110. So we kind of reached the projection to the downside already. So that's why I kind of like, at this point we are somewhat extended to the downside, and then we have this support line here, right? We did have this support and it's moved back, and right here too, this somewhat a semi long-term support line is kind of broken at this point. Based on the weekly chart right here, is broken, and then right now it's testing that. It might move back down. If it move back down, it's gonna be a problem. So at this point right now, look at that. This is the monthly chart, and that's where it's moved below. It's closed below the monthly. Oh well, this month hasn't ended yet, but we will find out in a couple of days. But right now, we will see how it's gonna play out. But I mean, it's possible it still could continue to move lower. Maybe in a month from now, and then they're gonna go back up. That's what I'm assuming at this point by looking at this chart and the economic data. That's what I'm thinking. But that's what I think. It doesn't matter. The market has their own thing. And then the bond, the junk bond right now, it did move back up that much. uh, you know, right here. So I mean, compared to that, the trending Y is still weak. So I mean, it's still priced in, I guess, a high interest rate at this point, rate hike. So that's in some way diversion from the TOT a bit on pricing. And you know, right now, as it's moved down more, it's gonna be a problem. It's signaling something, and hopefully nothing gonna be breaking. All right. And next we have the dollar. The dollar here is still uptrend. Right now this move back here is probably around 50% retracement, and it's still stably. I mean, it's my, oh my god, who is? And the only thing is, like, this breakout right here, the volume is not that strong, so I'm not sure whether or not we're gonna break out again. But right now it looked like we possible, if we're gonna hold steady and move sideways, and then maybe that's gonna be the last breakout. If we could break out, maybe lower volume, and that's gonna be a problem for up move. Right now this is the weekly, and we are still in the uptrend right now. Okay, so just so that, and if dollar move back up, the stock market gonna move down. So we will see how that goes. Gold is on life support right now. It's still held unless, I guess, it's broke below this level, and then the uptrend is done. Right now it is in, you know, is this support line, this uptrend line is holding gold up right now. Why am I so nervous? I'm not sure why. Okay, silver, I'm not gonna talk about that. Okay, BNO right now, which is Brent crude oil. The uptrend is still hold right now. It doesn't look good because it did not make a high here, and then it's pulled down. So I mean, with demand destruction and stuff is happening right now, I'm not sure oil gonna be moving back up. So it's still a possibility because the uptrend is still intact at this point. But I think it's a little bit harder for oil to move up unless something else happen. Maybe a hurricane hit the refinery or whatever. You know, there are other external things could happen, and it could drive the price up. Or, you know, Russia with Ukraine, we don't know. So I mean, right now at this point, based on just, if nothing like no black swan stuff happen, then oil might have a problem moving back up higher based on that. The VIX right now doesn't say much. It's staying in between, so I'm not going to talk about that. And then Europe here, this pullback in some way I think is there because it does pull back to new low here, but they haven't filled the gap yet, so it's kind of weaker. So this bounce from Europe signals something else too, and Europe, it is weaker also. So you know, at this point, you know, that's something you could see. That's a diversion from the thing. All right, let's get to the big cap tech here. Look at Microsoft. They fill both gap already. So that's why I say, like, maybe the reason why the SPY and the QQQ move up a lot, because due to the big cap tech, it was strong. Okay, so basically they fill both gap already, and it kind of broke out of the you know, the short-term downtrend here, and we will see if it move above this. I think it has a decent way of putting in the bottom for the market. If it does, we will see. But multiple thing, right? So that the Microsoft, and then right here it held the short-term uptrend here. So that's so you know, right now the uptrend is still with the Microsoft, and this stock is crazy, I have to say. All right. Apple, not as strong as Microsoft, but it did nearly fill the gap here. Okay, but I think at this point, I think Apple next quarter earning is going to be a problem. They might come out, and this might be you know, they usually Apple's come out and you know, if they do bad or something, they usually come out and signal first before the earning date. So this is something to think about. Okay, right now is still weaker than the other tech stock, but it's stronger than the general market. Okay, because right now the downtrend is still in right now at this point, and the volume actually is kind of decent. All right, NVDA here, this is kind of weak. this the semiconductor at this point, and then I guess because of the Bitcoin pricing and all that stuff too. So right now it did fill this gap, but I feel like it's not as strong though compared to the other one. And then volume is quite timid on Friday, but we will see how the move is, because the move up right here maybe like 50%. Let me see, Apple, yeah, the move up is more than 50% already, right? Google, the move up, yeah, like nearly filtered done. So like Nvidia is not as strong. Tesla here, I mean, it's fairly strong, but you know, it broke this it's broke under this short-term uptrend line here. I'm not sure if they are strong enough to able to recapture that. So that's a big question. I feel like that is probably going to be the resistance, you know, 800 most likely if it does go up, and then it's going to come down. Right now I feel this is a bear flag here, and then if it could make it down, this is going to be like 500, man. So right now Tesla is also fighting for its life too. So just so you know, this look possibly maybe a bear flag to me, but we will see. The move back up is pretty decent, and it did not make a low though, so we will see. Amazon already filled the gap. Okay, so but the thing is, I'm not sure how well they're going to be doing. They have multiple businesses besides just e-commerce, but we will see. But then the volume right here is not that strong, so we will see how they're going to be doing. But all the big cap tech move up really big last week on Friday. Facebook here still weak compared to the other one. Didn't fill the gap here. Wow, did not have the stuff, but you know, that's the exception in some way. Netflix too. Netflix did not really move. It's consolidated sideways. This could result both side up or down, possibly maybe downside here. I don't know. Look, doesn't do good, but we will see. And then this thing here, this another thing, right? Financial has been weak, okay, and they didn't fill the gap here. So right now, I think financials still signal that the general market right now, you know, that because they should be doing well and they're not. And then this bounce here, they're supposed to be do well, but they are not. So you know, this also a diversion. That's what I see. And then look at this, right? XLV just like ran all the way back up here and kind of broke out of the downtrend line. We will see, because they're gonna have a pullback, and then whether or not how big the pullback we will see, that's the thing. But like, you know, if the healthcare sector moving back up, that's not good for the market. It's not saying, you know, it's a defensive sector, right? And then another thing here, utility ran back strong, nearly 50% now, right? From the back actually to this breakdown level right here. I'm surprised. I didn't think it's gonna. I expect a bounce, but I didn't expect this strong of a bounce. So right now, that's another thing, is that are we pricing in a recession here or something? But this is also defensive play, right? Defensive, healthcare, utility moving, and then the tech sector moving. So I'm not sure what's going on at this point, you know. All right, next on energy. Okay, energy is moving down. Okay, I guess, yeah, so basically everything kind of point to a recession signal, right? Energy pull back down, and at this point right now, I think it somewhat might be broken. I don't think it's going to come back up to this level anymore, but it's already reached. If you see the last week video, I mean, this is 2008, right? The volume, the price, the high they had reached the high up to 2008. This one, I guess, is an exception here. So it's already reached the high, and that already signal a recession in some way. All right, and semiconductor is kind of weak. It did not fill the gap here. All right, so that's the thing. I'm not sure what's going on with semiconductor here, but look like it might has more downside to go at this point for me. What I see. All right, let's get to the earnings stock. Nike here. Nike, to be honest, I like Nike shoes, but I'm not a fan of their management. Okay, to be honest, because the thing is that right now they are complaining about fake shoes, but the thing is they created this problem. They decided with the reseller. The reseller copied with bot, and the people that want the shoe couldn't buy. Did we have to end up buying resale prices? And at this point right now, the fake are so good that you couldn't really tell the difference from the real one. So people jump in and buy fake shoes, and now they're complaining. But the thing is, this is the problem you created for yourself. You're not fixing that thing. You can't blame people. So that's the thing at this point. I mean, that's my personal opinion with Nike. I think some management change or something have to do with that shit. And then New Balance now is kind of it's kind of trending more than Nike. So at this point right now, it's also consumer good, discretionary. I don't know whether or not people are going to be spending on shoe at this point where they are strapped on the spending. So right now, I mean, I'm not bullish on Nike. At this point, the way to set up right now, too, the pullback up here, I mean, they put in a high and low here, which is good. The pullback is not that strong. It didn't feel this really gap here. I'm not sure if it feel the gap or not. It might on that one, but Friday move up wasn't that strong, and then that what I see, right? And then they also, if you look at the weekly here, they put on the top is in the double top right here, but I mean they did pull back to the COVID high here at this point. Whether or not the customer are going to be spending the money, I'm questioning at this point right now. To be honest, this quarter, if it's good, I'm going to be shorting Nike, because if it's good, it's going to move up. But I know for sure the next quarter is not going to do well, because right now, based on what I'm seeing, is cutting back. People are cutting back everywhere. All right. So shoes, you don't need new shoes. All right. So that's the thing. So right now, I don't know how to play this. At this point, it's kind of like at the major support here. So I hope they do well on this quarter so that they could move up, and then I could short it. To be honest, that's what I want. It could move up here, then I'll short it. So at this moment, it's right in between. This down channel right here, I mean, it's not. I don't think the benefit, you have much upside to go, because you have to be resistant here, So we will see. And Nike doesn't move that big during earning anyway, so that's another thing. So it's not something where you could play, okay, unless they come out surprise. But right now, if surprise is the downside. All right, and then Progressive. This is system software, but the thing is, I don't know much about this company, to be honest. But it's trending up compared to the general market itself. You look at that. It's the weekly, and this the monthly. So it's uptrend. It's about to break out again. Right here, it tried to break out, but the volume wasn't good. So I'm not sure they're able to break out here. But which, if it does, I'm surprised. I don't know what this company doing. And the thing is, the trade, it's not a lot of people trading this company either. So that's another thing. But I mean, right now it looked like uptrending is kind of like for this stock right now. Okay, and the volume on Friday, look at it, it's like a decent volume for this stock itself. On Friday, move up to make a high here. So I right now, if anything, I would wait, because if this move up right here, because it's kind of like move up, this volume kind of supported move up, but I think it's my top out around here, or maybe a little bit higher. But I would, if it does do well on earning, I would wait for it to go above this and then play the pullback. They're going to pull back, most likely. Usually they will pull back after they reach this new high here, because they come up from the bottom here, right? So they need some rest, all right, if they hit this one. So they're probably going to pull back. That's when I'm going to buy in, to be honest, for this company. That's how I would play it. But at this point, I would wait after earning. Okay, hopefully it do good, and then and hopefully it's make a new high, and then I'll just play the pullback then. All right, that's the Progressive. BB, this company, Bed Bath & Beyond here, I think is the next bankruptcy, to be honest. They try to fix this, but look at that. This is 2009. It went down to $16, and COVID, $4, right? 3 something, and now it's just drifting down right now. So I mean, no comment. I think don't play this unless you want to short squeeze somebody, because the to be honest, the wow, percent short outstanding is 28%. Just so you know, short interest. All right, PayX here. I don't know much about this company either. But right now it's kind of in an uptrend. It looks kind of weak right now. I think it's in a rising channel here. So this could possibly go down on the bottom. Could break down here. Yeah, right now this is the monthly, and it's toppy at this point. And look at the volume. And then the pullback up here, they make a lower low, and then the pullback is not strong. I mean, it's kind of strong. It's kind of through the gap here, but at this point, I don't know much about this company to say anything. But look at the high here. Wasn't that much volume, and then we come back down. So this looked like a double top in some way for me. Okay, and then if it's break down this level, that would confirm. So right now, this up like, and then it's like a slope rising channel too. So double top, slopey rising channel, both negative to me at this point right now. It's just that we need a confirmation if it's break under 110 here. So this stock is not really traded much either. That's another thing. And the earning move, do they move a lot? I'm not sure here. Yeah, earning day. Actually, they do some actually they do move big on earning, decent on earning day. So but right now, I'll just wait. Too much resistance here. We will see about that. Right, General Mills at this point, I mean, this chart is bullish too, like, well, yeah, it make a double it make a higher high here, but like the volume is low. Right, the uptrend, to be honest, if you consider this, is still on an uptrend right now, and that the long-term uptrend is gonna stay in the long-term uptrend. And right now it looked like it's rising channel to me with low volume here. So I mean, if I'm not sure this able to push to new high. This is the weekly here. And this is a daily. It make a low here. It move up pending the earning. I mean, are they able? This the question is, are they able to pass on the cost, the inflation cost to the customer, or whether the customer is still paying for brand name stuff, or they settle for generic price here? I'm not sure. People are doing that at this point. I mean, middle class people probably still are doing it, but at this point, I'm kind of skeptical. This to me is a rising rising wedge, which is bearish. And then if they move down, it's gonna move down big, to be honest. Because if you see some of the utility stock that break down, and the other like Procter & Gamble, those stable stock, when it break down hard. But like, because General Mills, I guess, is food, people still need to eat. But I don't know. I don't know whether or not they're able to pass the cost on. Okay, so at this point, be careful with this. If in it, I think the downside is more beneficial. And then this McCormick, I think, is Spice. This doesn't look too good, to be honest. This is the weekly chart. They already put in the top at this point. That's what I see from the chart here. It make a high here with like lower volume, and then in this part right here, if you look closer, it looked like a head and shoulder, right? Left shoulder, right head, and right shoulder here, and then they put in that, and it broke this level here, the neckline level. They came back, test it, and then move back down, and now it's come back to this level. to test this breaking down here. McCormick, I mean, it's food, but I'm not sure what they're making besides spice. So if only spice, I think they might have a problem. And based on this chart compared to General Mills, this chart is weaker, way weaker. Okay, so right now, I mean, there is a big resistance at 92. So if you want to play, I mean, that's $5. That's around 5% maybe. And then we have the 200-day moving average too. So I mean, there is a lot of resistance on here. So I'm not sure upside is a good play for the stock. And the earning, usually around earning, they don't move that much either. So just something to watch. Okay. And next one we have the Walgreens. Walgreens doesn't look good. I'm surprised when I see this chart. You know, the daily chart is kind of confusing, but once you move out here, it's just bad. Look at the monthly chart. 2008. You know, it put in it's sideways for a while here, and then it's broke down. You know, broke down before 2020, before the COVID hit, and it moved up. And during COVID, it make a lower low here, and it has never recovered above the COVID level. So that's the thing. It's so bad. This chart doesn't look good at all. And then, you know, at this level, it's consolidated sideways. This distribution, and this become a really strong resistance, and they wasn't able to move back up here. So at this point right now, I'm not sure how well they're doing. The uptrend, the long-term uptrend has already broken. All right, and right now, I mean, if it broke under this level, it's going to be a problem. 35 under 35, it's going to be a problem. Right now, I mean, it looks somewhat bullish in the setup wise, because it's kind of put in a falling wedge here, but whether or not they could pull back up above, yeah, whether or not they could pull back up above like 43, $44, that is the question, because that has been so strong of a resistance. Actually, 50 something. I'm sorry. Okay, $45 is the short term, $56 is the big one. So right now, it has to move above 45 to break this downtrend here. So we will see how it is, but at this point, I wouldn't play it, because usually Walgreens, they make money on the front end, not the pharmacy part, the convenient part of it. But at this point, people are strapping cash too, so I don't think they make people go there to shop, you know. So I think there is a problem with that. They might not make money. All right, just that's what I'm thinking, but I could be wrong. But right now, it's still in the downtrend, okay, in the middle here. So and this thing doesn't move. That's crazy to the upside at this point. This is somewhat discretionary, because a lot of the money are make on the convenient part of it. So just so you know, that's why the stock is so weak compared to CVS. CVS has other aspect, like they bought out one of the managed care or something, right? They have the health insurance part to it. That's why CVS compared to Walgreens, they do better. So that's a different. All right, and then this also another food here, food packaging company, consumer stable. I mean, this look a little bit stronger, okay, but right now, I'm not sure the top is in for the stock or not. Look at the monthly. I put in a high, but the volume wasn't great. So I mean, that might be a problem. And they already broke this this uptrend line here, in some way short-term uptrend line from the bottom of 2020. So I think this might go down. I would play to the downside, but after earning, at this point, when we will see whether or not they could pass the cost on to the customer. But right now, it doesn't look good to me, because it's kind of like the uptrend is kind of broken at this point. Look at that, and come back to test the uptrend line here. So I mean, it could move up to 40. It might be a problem. But on the thing right here, I see the volume on Friday, it jumping a lot. All right, so we will see on this one, but And then we have Micron. Wow, it's 2 in the morning already. I'm surprised how weak this is. I didn't realize it moved all the way down to like $55 from $100. All this time I didn't really look at Micron, and it looked like it's a double top, and then the distribution here is broke. Okay, it's sideways in this panel for like a year and a half, and now it's broke under. So and then also the short-term uptrend, it broken that too. So at this point right now, $65 is a strong resistance for them to come back up here, and I don't know the. So right now, I mean, if anything, I would wait for this to move up to 65. If the earning is good, and they move up to $65, I think I will short it because this is a strong resistance. Look how much the test this, and then finally broke down here, and yeah, I think this is a strong resistance for them to move back up too. So, and the general semiconductor index is also weak. So I guess this, I'm not sure what the macroeconomic, what caused the problem for this is. I don't know, but right now it's really weak. So it could be a big downside here if the earning is bad. It could break down because right now it's kind of stay in support too. You know. Yeah, it could go lower, way lower. $45 is a possible next target in inside my short term. But if anything, I'll wait for it to go back to 65. If it does, then I'll short it there. That's how I would play it. But right now, downside is somewhat extended too. Just so you know. All right, guys. So basically, that was the last one, and I'm sorry for being so nervous today, because I guess I'm not understanding. But if you are watching up to this point, thank you very much for sticking by me. And anyway, guys, good luck and have a great trading week. All right, thank you, and bye.